Another big red day in the market. We just had one on Friday. In fact, we've had a lot this year in 2022, but today was a pretty deep dive in the market. And I want to say that a lot of us are going to be questioning ourselves, our investments. Should we keep buying? Should we sell? And I want to be here to tell you guys to stay strong. You know, this is a long-term goal we all have. We all want to create wealth, another source of income, more freedom for ourselves. And so don't give up. I'm also going to share my portfolio performance, which I'm not going to lie, it gets hard to do when, we get in these deep red days. But that's something that I have committed to you guys, is being transparent. So when others aren't showing their portfolios because of these bad times that we might be going through, I will continue to show you mine, no matter how much it makes me feel like I may have bought some bad investments or at the wrong time. I want to be transparent. So if you're new to my channel, be sure to subscribe so you don't miss an episode, but also so you can look at somebody's portfolio and somebody that's transparent, and that's going to show you the good and the bad. So let's get started. I think what the market is doing right now is it's reacting to one thing, and that's inflation. We saw that inflation came in at 8.6% versus their expected 8.3 or 8.4%. And the one thing you have to know is that when inflation goes up, the valuations of companies go down, because that puts a lot of pressure on expenses, on borrowing money, a lot of other things. It makes just everything more expensive. I mean, think of it like this. When we go buy gasoline, now that it's high, a lot higher than it's been. I mean, I saw for the first time in Albuquerque here that it's now over $5, which is insane to me. But what does that do to our personal budgets? We have to put more money towards that, which means we get to keep less. So it does the same thing for corporations, and that's what you have to think about. That's why the market's going down, mainly why I believe is because of inflation. And in fact, you have Warren Buffett, who recently, in this article, it says, the Fed is poised to hike interest rates this year. Warren Buffett has compared rates to gravity and said that they power everything in the economic universe. So you have, now U.S. Treasury bonds and things like that that are now about 3.3%. So people are seeing that as now the safe thing to do and put their money in instead of the stock market, because who knows how long this can last. Who knows if we're in a recession right now or will be soon, and for how long. But what I want you guys to know is this is the time where people do make the most money, because while people have fear and are selling, if you stay strong in those companies that you do feel are going to be around for the long term and are of high quality, then really I don't think you have much to worry about except for being sure to add more during times like this. So let's look at my portfolio. Let's see what the damage is today. And if we look, just on Friday, I was barely in the red at a 0.1%, like very, very little, like 40 bucks in the red. Now I'm $1,440 in the red at 3.76%. And a lot is contributing to this. Technology is one of the big ones. I mean, Microsoft used to be 20-30% in the green for me. Now it's 3%. I mean, that's a huge change. Amazon was 7% in the green. Now it's 9%. Cisco is actually holding decently. I think that's because it pays a decent dividend, so people might be more willing to hang on to that. Meta, of course, is a mess. It's dipped into the 160s. But also, the financial sector is one to look at, because that's one that if a recession occurs, will get hit one of the hardest. So T. Rowe, which I was in the green for a little while, is now down 16%. We have VIXIS, the international ETF. Now, ETFs are supposed to be pretty darn safe. It's now in the red by 8%. And of course, we have lots of global conflicts going on. We have lockdowns. We have a lot of issues. And inflation isn't just hitting the US. It's hitting everywhere, like Europe, which is also a huge part of the market, of the global financial look at things. So yes, this is showing you that inflation is really eating at these companies' valuations. And so what I want to show you is the different markets. So if we look at the Dow, we'll see that it's down about 16% from its highs. And this is a 5-year chart I'll show for all three. A lot of people didn't think that the Dow would get below 30,000, so we'll see if that occurs. I think it's a high possibility. We have the S&P 500, which is down over 21%. That's a huge correction in my opinion, and now I think it's getting into the oversold territory, but it can still go further down. If you look at the tech-heavy NASDAQ, which is suffering, I think, the most, it is down 32.7%. That is massive, but again, I think the tech sector just rallied so heavily that this was expected, but how far is it going to go down? Nobody knows, but I think it's getting to the point now where I think it's getting in a correction territory, but I still think it can go further down, even though it's already been 32.7% in the red from its highs. So we saw my portfolio, but there is one thing that offsets that, and that's dividends. So if we look at my dividends, so far this year I've collected $357 about, and this month I'm just starting to collect my big month of dividends. So I'm sure this will go over 400 pretty easily, but this is my third year investing. So all years together, I have collected over $1,447 in dividends. And if we go back to my portfolio, I'm in the red, $1,440. So I've collected more dividends than what my portfolio is in the red right now. All I'm saying is dividends are another way to offset markets like this, because they're going to keep paying you and you get to reinvest into good quality companies. And this is something that will really help propel you. And it's providing a second source of income, right? Passive income. You don't have to do a thing. You just buy shares and it does the work for you. So I did buy some stocks today. I couldn't resist with the market dipping like it has. Of course, it can go down another, who knows, 10, 20, 30%. But we don't know if it can start going back up tomorrow. So I figured I'd take advantage of a big red day. So I want to let you guys know what I bought and why. So I bought 3 stocks. I bought a few shares of Amazon. To me, Amazon is still growing. It's Amazon web-based services is a growth machine. It's a powerhouse. And I think that is something that is being heavily discounted. And when this really comes to light, I think the stock is going to rocket up pretty massively. So I bought a few shares of Amazon. I bought 1 share of Home Depot. You know, there are fears of the housing market and it crashing, and I think that'll affect more of the home builders. But a company like Home Depot, I think, is going to fare just fine, because we had so many new buyers into the market in 2020 and 2021. They're going to be doing DIY projects to save themselves money, and they're going to be going to places like Home Depot because they just bought these homes. They want to fix them up. They want to make them nice. They want to do repairs. So I think Home Depot is one that is a strong buy in my opinion right now. Now the last one I bought is T Rowe. I just really like T Rowe. I think that this company has a lot of assets under management that will shrink if we go into recession, but regardless, this company is very strong. I did a video on it not too long ago, maybe 3 or 4 months ago, which I highly recommend you see. I put a lot of good points in there. And as far down as it is, I think it's pretty much a still. I think if this stock goes below 100, which I think is the time where it's going to see a lot of pressure to go below 100. So I don't know if we'll get there, but if we do, that's kind of the load the boat type of opportunity for a quality company with a very healthy dividend. So these are the 3 stocks I bought. Again, there's a lot of companies that are being targeted like Amazon, but yet they're growing. And so to have their stock go down, 35 to 40% now from their highs, to me is a no-brainer. Home Depot is just such a strong quality company, and it pays a great dividend as well. It has its flaws. It has high debt, but to me, Home Depot is growing, and it's going to be a strong player regardless if the housing market crashes, because I think that people are still going to go to Home Depot regardless and buy things because they are cheaper than Lowe's in my opinion. If you compare the two, they have a big, strong online e-commerce presence. I use their app before to buy things, and it's super easy. So all I'm saying is look at those companies you think are being oversold that are still growing and have a bright future, and those are the companies you're going to make a lot of money in once we're done and through with this inflation issue. You'll be very glad you kept buying and didn't sell and didn't become fearful. So I'd like to know what you guys are buying, if you are, or if you have some fear, share it. We can, talk and make sure that we can help each other out, because it's going to be tough for all of us. It's going to be tough for me at times, but I just got to shake that off and remember, if you look at all the dips in the history, they all recover, And those are always the best times to stay invested, to keep investing, to make money in the long term. So with that said, guys, let's see what this crazy market continues to do. But I think as long as inflation remains at all-time highs, we can see downward pressure on the stock market and a lot more red days ahead. So just stay strong. Always keep some money saved for a rainy day, 3 to 6 months, they say, of your expenses. And then you'll be fine. You have nothing to worry about except for focusing on which companies to invest in. So you guys have a great day. We'll see you soon on Mark Arnold's Finance.